Okay, today we are going to go through the topic classification of accounts. Okay, now accounts, as we have gone through already in the previous lesson last year, account can be divided into two. One is the personal and one is the impersonal. Okay, as you can see from the name itself, personal, and this one is impersonal. Okay, so personal. Okay, what can you think of? Okay, you can think of a person. So personal is regarding person, okay? So under personal, we have the trade receivables account and we have the trade payables account, okay? If you can still remember from the previous lesson, trade receivables are the customer who owe you, okay? Credit customer who owe you when you supply goods to them on credit. Whereas trade payables are the creditors, okay? Another name is creditors. So they are the credit supplier whom you owe to, okay? Because you buy the goods from the supplier on credit, meaning to say you not yet pay the supplier, okay? That's why they are your trade payables, they are the creditor, okay? So trade receivables, customer who owe you, and trade payables are supplier you owe to, okay? Because these two are regarding the credit transaction, okay? When you sell goods on credit, and this one is when you buy goods on credit, okay? So these two personal are related to the person, okay? Sometimes under trade payables, it can also be under business name, okay? For example, like ABC company and so on, okay? Now, impersonal, as the name suggests, is non-person, okay? So under non-person, we have real or property. By this, we mean the assets, okay? Asset, as we have already learned the last lesson, are the resources owned by the business. For example, like building, motor vehicles, okay, and cash and others, okay, for example like inventory and so on, okay. This is also an asset, but this is under personal, okay, because this is a person. Impersonal, nominal, okay. Nominal can be divided into expenses and income, okay. As we have already learned also previously, expenses are the money spent in the business operation like rent, interest, advertising, water, salary and so on, whereas the income was being received by the business, their source of income, okay, for example like sales, rent received, interest received and so on. You see the word receive at the back, okay, and it will be mostly under income, okay. So income and expenses, they are under nominal, okay. When we say nominal account, expenses and income, okay, and real or property refers to the assets, okay, and personal are the trade receivables and the trade payables, okay. So this is another way to classify the accounts, okay, the categories, different categories, okay. Now let's move on to the accounting equation, okay. Now this is the accounting equation, this one. Assets equal to owner equity plus liabilities, okay. So assets are the resources owned by the business, okay. What a business owns, and these two, owner equity and liability, are sources of resources from where you get these resources, okay, from where these resources are being financed by, okay, or from where you get these resources, okay. So what a business owns equal to what a business owes to the owner and the external source, okay. So what the business owes to the owner is the owner equity, and what the business owes to the external sources is the liability, okay. So the accounting equation shows that everything owned by the business, the assets, is financed by what it owes to the owner, which is called the owner equity, and the external sources, okay, aside from the owner, which we call the liabilities, okay. So you can take a look, if it's still not clear, maybe you can take a look at this, okay? So you see, these are the resources of the business, okay? The assets of the business, for example, like building, the motor vehicles, and maybe we have the machinery, we have the cash, okay? So where does these resources owned by the business come from? These resources are from where, okay? The sources of these resources, okay? So these resources, where do they come from? They are being financed either by the owner equity or financed by the liabilities, okay? Liabilities, okay? Okay, for example, the owner, okay, they can bring in the capital, okay, a sum of money, okay? The cash could be bringing to the business by the owner, okay, which we call the owner equity. And for example, the motor vehicles could also be bring in, okay, financed by the owner, okay, who bring in into the business the motor vehicle. And then the building, for example, it could be being financed by the bank loan, okay. So that's why this accounting equation states that whatever a business owns, okay, it owes it to either the owner or the external sources, okay. So the resources of the business equivalent to the sources of the resources, okay, where the resources come from where the resources is being financed, okay. And this equation will always hold true, will always be balanced, okay. Assets equal to owner equity plus liability, it always has to be balanced, okay. So now assets, this is the accounting equation, assets equals to owner equity plus liability. So you will write over here, assets equal to owner equity plus liability, okay. You'll write it over here. Now liability, if they ask you what's liability, you are being asked to find this one, okay. So can you do it? Give it a try. How should the equation be if you are asked to find the liabilities? Okay, yes. So if you are being asked to find the liabilities, so this one you will move over, okay. So become assets minus, this is plus, right? When you move it over, it become minus, asset minus owner equity, okay, equity. Okay, now if you are being asked to find the owner equity, how should the accounting equation be now? If you are asked to find this, so you move it over, and how does the accounting equation appears now? As owner equity equal to asset. Yeah, okay. So this one you move over. If you are being asked to find this, you move this over, so it becomes assets minus liabilities, okay. Liabilities, okay. Now next, this one I'd like you to have a try. I'd like you to have a try at the exercise by yourself, okay. Okay, this one I'd like you to give it a try. Asset, this is the accounting equation. Assets equal to liability plus owner equity, or owner equity plus liability is the same, okay. So if they give you this, what is this, okay, find it out for me, okay. So assets equal to liability plus owner equity. So liability is 10,000 plus how much? We get 30,000, okay. So you'll do this, okay. Take note, this one, assets equal to liability plus owner equity, okay. So you do this one for me, okay. You do this one for me, okay. And this one also, you give it a try. If right hand capital, okay, the owner equity is 40,000, the liability 6,800, calculate his assets, okay. So again, you use the accounting equation, assets equal to owner equity, okay, plus liabilities, okay. So this one owner equity they tell you is 40,000, and this one liability they tell you how much, okay. You find out the assets, okay. And this one is the same. You do it, okay, for me. You use the same accounting equation, find the liabilities. And this one also I'll give it a try. So calculate Hazi Hamza capital. Okay, again you use the accounting equation, asset equal to what? Asset equal to owner equity plus liability, okay? And then you analyze this. Building is an asset. So motor vehicle assets and so on, okay. So you after you identify what categories this is, okay, you use the equation assets equal to owner equity plus liability, okay. Find out the capital, okay. Find out the sometimes we use it inter exchange owner capital and owner equity, okay. Called capital. Okay, so I'd like you to give it a try first, and then we'll go through together next lesson the answers.